Hi, it's Megan Johnson, your local 5-star realtor here with Realty One Group serving the greater Dallas area. And I come with the latest market update here, mostly for June because that represents our last reporting period. But when we do talk about interest rates, we're talking about current interest rates. That is what the second or going into the third week of the July 2022 month here. So also when we talk about our counties, we're largely focused on Dallas County and Collin County, our two primary service areas, but obviously we do have the data and intel on Tarrant County and Kaufman County as well, two other large counties here in the area, not to mention Denton County too. So many counties that represent the Metroplex here, and we do count ourselves as specialists in the Metroplex. So know if you need any additional information, we are always here and in your corner and happy to help. So let's dive in, shall we, and look at the numbers. When we look at the data, we specifically have our four forces is what we call them. So first we've got consumer sentiment. That is going to impact consumer outlook, the general consumer outlook for the market at large, and is also reflected in our purchase behaviors as consumers as well as our saving behaviors. So in good times, we as consumers spend more. In bad times or fearful times, we typically spend less and save more. We also have information on inflation. So where we are from a consumer confidence perspective in the state of Texas, and this all comes from our state comptroller, so this is widely reported, is that we are down 23.6% as it pertains to consumer confidence, and that is year over year, June to June. And when we look at inflation, so we're up 9%, that is year over year. And we know that the Fed is working very aggressively to temper inflation. And they are doing that through the increases in the federal funds rate. So based on my last video, things have gotten even more aggressive in terms of economist predictions. We were originally looking at a 0.75 basis point increase to the federal funds rate, and now projections are looking more like 1%. So we'll see what happens there at the next meeting here in a few weeks. But that brings the 30-year fixed mortgage to 5.71% as of this week. I think my data here points to interest rates of 5.7 or so percent as well. So still in line week to week. Now, when we look at inventory, we are up on inventory across the entire MLS year over year, and we are looking at gains of 23.1%. So that means that inventory levels this year, that is as of this June 2022, are 23.1% higher than June of last year. And that's new listings, not active listings. We've got some information on active listings, but this is listings coming on the market. So we know that sellers are recognizing that that window is closing and people are trying to take advantage. And going to my last videos, now is the time to sell if you've been thinking about selling in the next 6 months to a year, because the tide is quickly turning on this super advantageous sellers market as we begin to exit. And you'll start to see some of those increases to days on market and what I present here for us. So we also have here our economic outlook, which shows that Texas has a very strong economy and that unemployment is down 1.9%. And that's slightly ahead of the overall U.S. economic picture month over month. So we're still seeing very strong unemployment as we're seeing the downward trend. Now let's take a look at interest rates. As I mentioned, we are seeing interest rates of 5.71%, and I pulled these about 4 days ago. So we're really talking about mid-July of 2022 is when I pulled these, specifically July 14th. I feel like is when I last pulled these. And in terms of Today I received the update. I think we're at 5.77. So they're holding pretty steady, plus or minus a few points there. But we do know that that's largely been up. You can see the historical trends here from 2013 to the present time. We are at the highest rates that we've seen essentially in the last decade, and we know that those are going to continue to rise. But again, that's just this one decade. We know that overall we're still experiencing or getting closer to about the historical average, but are still looking at historical lows when we look at mortgage rates and their trajectory over the long term. So 30, 40, 50 years essentially is what we're realizing. As we mentioned, we talked about that 0.75 basis point increase is expected at the July FOMC meeting. Other predictions have even been more aggressive and have anticipated up to that 1 basis point increase as well. So we're on the fence there. If you are a buyer active in the market or a seller that will become a buyer that will be active in the market, I do have an awesome lender partner that is offering a 120-day rate lock. So I do recommend that you all give us a call, ask us about that product, because we are anticipating increases. So now is a great time to get your rate locked in if you'll be closing in the next 120 days or 90 to 120 days, 3 to 4 months or so. If you're currently in the market and working with another realtor partner, ask them, who they have in their arsenal that can offer these products, so that if rates do go down, you can still adjust. No one's going to stop you from getting that great or better rate at that time. But all forecasts point to increases, so get it locked in today to get the best terms, especially that lower payment for you in today's market, right at today's rates. So let's dive into the Dallas County data here specifically. We are realizing 3,385 active listings on the market as of the end of June. And that's going to represent a 5.8% increase year over year. But that means that sellers are coming off the fence ultimately and taking advantage of this primary key selling season, and that they are in the market, right? So that's where we get that increase in listings. But we see it's been up 5.8% year over year in Dallas County alone. Now, closed sales are down 11.9% year over year. So I don't know if you all have been hearing or seeing what I've been hearing and seeing, not yet experiencing, thank goodness for my buyers, because they are staying in their contracts, but a lot of buyers are actually pulling out of the market right now. And not just pulling out of the market, they're actually exiting active contracts as well. So if you all have seen any of those headlines, that is definitely happening. So buyers, don't get cold feet. If the numbers still work for you and your lifestyle and your family or your living situation and your ultimate life goals, stay in the contract, because there is no greener grass. There will be no better time to buy, as we can expect continued inflation, right, and price increases in real estate, pacing with inflation, as well as the cost to borrow is anticipated to continue to rise through the end of the year. Now, what we are seeing is that the median sales price does continue to climb. We're up 17.3% year over year at $385,000. But there is a little bit of movement in here month to month on that median sales price. So that has trended down slightly month to month from our peak of earlier this year, but we are still seeing those gains. That trajectory of growth has plateaued, essentially, is what we're seeing. But for the most part, still a very strong seller's market. As we've been saying, the sales to list price ratio at the median level on these homes is 103.1%. So that means that sellers are getting 3.1% over the list price on average. The total days to close is 47 days, which is 9 days fewer than last year. So lenders are keeping pace. Cash buyers are shortening those days on the market. Financed buyers are shortening those days in the contracts. And overall, the ecosystem is quite efficient right now. So we're seeing a reduced number of days there at 47, which is really good. Now, the month's inventory has increased to 1.5 months. At the height of this, between the two markets, we were seeing half a month's supply of inventory, 15 days on market, if you can imagine. The market was turning over every 15 days. 0.8 days, 24 days essentially, or 0.8 months, 24 days essentially in the month. The whole market was turning over. But, we're slowing down a little bit, as we all have seen. And now we're up to 1.5 months of inventory. Still incredibly strong seller's market, because we know that anything pretty much between 4 to 6 ends up being a lot more neutral and kind of flipping more toward the buyer's market. So still a very strong seller's market. Today, the entire market is turning over at that 45-day mark. But again, that trajectory is just going up. Days on market is going higher and higher and higher, and the data points to that. Looking at Collin County, we are up a whopping 67% year over year on active listings. So we can say that a lot of these sellers probably parked last year, maybe due to economic uncertainty, maybe due to the fact that the market was going to continue to go up and up and up and up and up, right? And people were seeing this astronomical appreciation, particularly in Collin County. Well, those folks have realized, just like I've been saying, that there has been no better time to sell than the first 6 months of this year, and still today they're coming off the fence, and we see that listings are up 67% year over year, which is just crazy. And we can anticipate that to rise, as I know a lot of folks have just been on the fence. The prices have continued to go up for them, so they're getting real gains in equity and appreciation in their home, which anyone could understand. But the tide is turning, like I've been saying, and we have plateaued a lot of ways in terms of buyer demand, and that being out of sync with the inventory levels. Closed sales are down 20%, and what we are still seeing are those price gains of 30.5% year over year, still very strong in Collin County, with the median sales price being $575,000, or about 5% over that list price. So the sales price to list price ratio of 105%, meaning that sellers are getting on at the median 5% more than what they're asking for the property. Now in Collin County, we're seeing a total of 54 days to close, which is 3 days fewer than last year. And the month's inventory, and this is really high for Collin County, and like I said, is at least almost 1.5 times from what it was at its height, 1.9. So almost 2 full months of inventory in Collin County at this point, which would be about 60 days. So there you have it, folks. That is the latest and greatest market update from me and my team. Know that I'm here, always in your corner, to be the best advisor that we can be, and we're happy to help. So until next we see each other, stay safe, stay blessed. You know where to find me, and we'll chat soon. Bye.